Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. I do like reading a lot of the comments here. I do want to respond to one. The comment is, still to this day, I can't see any other YouTuber that connects real estate to inflation. And I didn't necessarily connect real estate to inflation. I mean, I did that. But what's driving it is demographics. And ultimately, anything that you look at, it's demographics that drives everything. So if you have a high interest rate environment, what's happening is you have a larger demographic. The demographic is going from a smaller demographic to a larger demographic with age getting younger. So the younger people outnumber the old people is a demographic that's favorable for an inflationary environment. And that's really seen when you go into an expansionary phase of real estate. An expansionary phase will only occur if you're expanding that demographic. So the demographic's the ultimate driver of all of this stuff, of inflation. Now, inflation also prices assets because it's going to have an impact on interest rates. So interest rates has a direct impact on the price of bonds and the price of stocks. So depending on what your demographic looks like will direct money to certain areas based off of interest rates and inflation. So if you have a demographic that blows up, contracts, and then blows up again, which is what we have with baby boomers blowing up, Gen X contracting, and then the millennials blowing up to a larger demographic. When they hit home buying years, the 70s was the home buying years of the baby boomers, which is inflationary because we had more homes, more loans, which is inflationary. The credit expansion, it was ballooning up. It was a credit leveraging up. When that demographic ended, and it kind of came out of those home buying years, we had a smaller demographic behind it. So we couldn't sustain that inflation as high of an inflationary period, so it contracted. And what happened was we had disinflation. Inflation was getting less and less and less with time, and interest rates declined. But now we're coming into a larger demographic, the millennials. So we're going from Gen X to millennials. In the disinflationary or declining interest rate environment, stocks was a perfect spot to be in, same with bonds. Because you could buy a very high interest rate in 1980 and then ride the declining interest rate environment for the next 40 years, where bonds paid handsomely to hold. Now, looking at the other side is if we go from a low inflationary environment to a higher inflationary environment, where the demographics larger than millennials, we go back into an expansionary phase of real estate. That's going to direct money differently, obviously. Interest rates are going to come back up, I think. They may try to hold them lower because we may have debt problems with the government. If they try to hold them lower, the dollar is going to get smoked. So historically, when you have higher inflation rates and you've got larger demographics, inflation rates want to go up. And that's where bonds, you're going to see a rotation of money out of bonds into commodities and precious metals. But you have to invest in stuff that people are negative on. The only way things move is when you have a psychological change in human beings and that money gets redirected. So I have another comment that's right below it. It says BTC will hit 100,000 this cycle. I laughed when I saw gold goes boom video since it already gave up its gains. And the psychological negativity towards gold is saying that gold is probably the spot to be. Everyone is rampantly speculating on Bitcoin right now. Everyone. That is probably where the bubble is. Because when everyone has that positive mindset in their mind, that means all the money has flowed into it. And the retail sector is always wrong. They're always wrong. They are just absolutely get slaughtered every which way you look at it. So BTC, even though it may hit 100,000 in this cycle, it might. I don't know. But it's probably going to end up at it's probably going to end up in a bad scenario where it really gets sold off at some point. I don't know when that point is. There's no value in it. But gold, with the negative sentiment around it, I think is the spot to be. It does not look bad right now. Platinum especially. I like platinum a lot. People will start to recognize this soon, and we will crush the target. We're talking about oil here. The great thing about this channel is that we were buying the inverted head. We're already up big before anyone else even knows what's happening. I agree there. A lot of people says oil to $200 next year. Then we were talking about hyperinflation. It will be a good cry. And then someone says transition. It's supposed to be transitory, I think. But yeah, I don't know how high oil is going to go. I threw the chart there. The projections are far higher than where we are today. I don't know where it's going to go, but it's going to go a lot higher. I just don't know the exact pricing. I look for patterns. I look for reversal patterns, and that's when I know we'll hit a top. Next year, 2022, massive squeeze in terms of oil. Winter will be fun for some and a nightmare for others in terms of pricing, probably. Discovery Silver is supposed to come out with the resource estimate very soon, and last estimate was mid-October. I added more today. Do you have any insight or thoughts on them right now? They look good chart pattern-wise. A lot of these companies, I buy them and then I just hold on. I don't trade in and out. I don't follow all of the news. As long as the charts look decent, I hold on. He said, so are you retired yet or what? You're getting Silver Explorers now? I am. Yes, I am. Side note, Canalaska is beside baseload and reported something today. More of the radioactive material talk. Yep, so they're probably going to do pretty well. Their chart pattern looks really good as well for Canalaska. Looking at this, it says great info. Everybody contribute what you can to this gentleman. Hi, Andy. When you talk about dilution, I always just think of, but how much has our currency been diluted? Once money flows happen due to interest rates, like you say, for majority, dilution won't matter too much. Share buybacks as well for producers like you. And there's a lot of validity to that. So our money is being diluted. That's what inflation is. It's just a bunch of money, just, I'll call it diarrheaing out of the Federal Reserve. And then governments get to get this new money and they get to spend it, and so do banks. And there is share dilution that some of these companies have had to do in order to survive the wicked, brutal downtrend that uranium and a lot of these oil have endured. And I think with all of the currency dilution, it's going to push these market caps far higher than what they were last cycle. I also think that the price of uranium is going to go far higher than last cycle. I don't think 140 is going to be in the cards. I think it's going to be much higher than 140. How much higher? Don't know. Doesn't even matter. It's going to go a lot higher. And I do think that the market caps are going to go far higher when the money flows do start moving around and start choosing and selecting a lot of the commodity companies. So yes, I agree with your comment. I do think that they'll go pretty high, far higher than where we are today, I think. One thing to consider when thinking about the 4-year time frame is all the sources from existing mines tailings that when the price goes up to a sustainable level will start processing the waste they have piled up. I've heard SBSW and Barrick talk about this idea, and I'm sure that other mines have similar situations. Uranium is not that rare an element as a byproduct of some mines needs to be contained or cleaned up. In my guess, the ramp up in UR will occur before many mines can permit and get online operational in this bull run. Bannerman and the like may not make it in the bull run, but will be influenced by the thorium. High tide raises all boats, even boats with holes that are lifted up. Yeah, but Bannerman's like 3-4 years away from production. A lot of these other guys are far more away than that. So I think Bannerman's a good bet. They have a higher price to get turned on. But remember, a lot of these companies, they can't turn their production on very quickly. Even the ones that are on care and maintenance, it may take 2 or 3 years to turn back on. So when we hit a deficit somewhere, whenever that may be, I don't know the exact timing of it, we're in a deficit, but when we hit a deficit where inventory runs out, we can't just turn the stuff back on very quickly. So I think we're going to see a big price spike between when we turn on and when inventory gets to a critical level. A very big price spike. How high? Not exactly sure. It's going to be far higher than I think where we are today, obviously. And it's probably going to be higher than the last bull market. And if we have a sustaining inventory draw where it stays very, very low, I think prices are just going to rocket higher. Then more inventory may come on from care and maintenance mines and stuff like that. So we may fizzle out for a little while and then we'll rocket up again. So I think this is going to be a big stair step as we go higher in uranium over time. So that's kind of how I look at it. I put CCJ into a free ride and added to Deep Yellow and Recaf. Thanks, Andy. And Recaf's a small oil exploration company in Namibia, Africa. Hopefully they got something big. Their chart looks really good. They just put a bullish engulfing. It's contracting up to a point. I think that looks really good for a potential move higher. And hopefully it turns out that way. There's risk with everything, guys. And that's what I look for. I look for a chart. I mean, we're doing everything we can to reduce risk. You study the company, you look at their presentations, you listen to some of their presentations on YouTube that they release, and then you can read the chart patterns. And if the chart patterns look good, that's like all you can do in some of these companies. There's nothing else you can really do. And hopefully the patterns tell you when to buy and sell, because if you got a pattern that's creating and you put a big bullish engulfing candlestick, sometimes news leaks out and people know what's going on, so they start accumulating it before that news gets released. So you'll see patterns that develop before the news gets released, and almost always these patterns develop when before news gets released. Almost always. So more than likely, Recap's going to release some news soon, and it'll go either way. It'll go up or down. If we got a pattern that's showing that it will potentially go up, and that news will probably be released very soon. That's my guess. We'll see if I call it, but maybe it's got a couple more trading days left in it to go sideways before this whatever news or whatever gets released. And we'll see. It says, I also follow Silver Chartist, and I know one of the things he did with his original investment is buy solar for his house. So I don't think he sells shares without carefully thought out plans that he thinks is best for his family. Well, that could very well be. And if that's the case, good for him. And maybe I just missed that. And I'm not saying it's good or bad, but I do like Steve. I think he's a good guy. So I don't have anything bad to say. And I'm sure he makes really good and calculated decisions. And it seems like he does. So a lot of his advice seems very good. Thanks, Andy. Do you think that the reliance on a soon-to-boom precious metal like silver will affect solar's moonshot on this commodities bull market? Yes. I think copper will too. Copper's how you connect everything. And at some point, and I don't know when, copper is going to get very expensive and in very short inventory. So I think copper is a great play. I think silver is another one. It's a monetary metal. It's also the number 2 commodity. We use it everywhere. I own a bunch of it, physical silver. And I'm getting into some of this silver, little silver companies, little guys. And kind of just pick them up here and there whenever I get paid, and I'm going to ride it higher because that's where the opportunities are, I think. So platinum, silver, copper, tin, nickel, cobalt, lithium's been on a tear. I don't know if I add that, but cobalt's good, lithium's good. Those are like the metals that I like. Iron ore, I'm sure, is going to do all right. It'll come back, bounce back. And I own a lot in those companies, so those are the ones that I like. And the whole energy sector is going to kill it. I mean, just womp it, hopefully, because I've got a good portion in there, and that's how I set up a lot of my portfolio. It's those metals that I described and the energy companies, which is uranium, oil, and natural gas. I don't have any coal, but coal would be good too. I kind of missed out on that, but either way, oil and natural gas are going to perform just as good as coal anyway. So that's how I've positioned. And if you guys have any questions, put it in the comment section. Let me know how I'm doing, what you guys want to learn, what you guys want to see. I can do different clips as well. I do have, an engineering degree, lots of math, physics background. And then I studied everything kind of self with the investing. And investing, I'm passionate about that. My mind works like an engineer. My passion is investing. So if you guys have other questions, put it in the comment section. It could be anything. I can give you my opinion. Maybe it's buying homes or something like that. I can give you my financial opinion on that as well. If you guys like the channel and content, give me a thumbs up. Subscribe to the channel if you haven't already. And thank you for listening. This is Finding Value.